Today is Saturday, March 15th, 2025. And yes, it is storming outside, which is very fitting for where the markets have been these past couple weeks. This past week, I am down 6%. I know on the day it's kind of misleading because I am up 7% on Friday, but that's only because I am down so much. But yeah, so basically almost 7% down for the week, and then 32% down on the month. And I believe at one point I was down 60 grand. Yeah, so at one point last week I was down $60,000. I know the title of my last video was Stop Crying, I'm Down 50K. So I did end up losing another 10 grand after that, but I did have a slight bounce back on Friday. But year to date is kind of interesting because I am still somehow outperforming the NASDAQ year to date. And I'll show you guys what I mean. So year to date, the NASDAQ is down 6.83%, while I am only down 6.68. So even though it's not much, I am happy. I am still outperforming the NASDAQ, even though it doesn't feel like it, because at one point I was at 170K, even though I never hit that milestone. 169, 170, basically the same thing. I don't feel like I'm outperforming the NASDAQ, but technically I am. And for this video, I kind of wanted to do something different, which is read off the comments of my last video. And one of the reasons why I wanted to do this was because I wanted to show you guys just where market sentiment is. So before I start getting into the comments, whatever, I wanted to throw up this survey that Bloomberg had on YouTube, which was how many people think, or when do people think a recession is going to happen or something like that. And some of the options were you can't predict a recession, which is the one that everybody should have clicked. And then the other one was it'll happen this year or next year. I personally think it'll be next year, not because of some super smart reason. I'm not one of these gurus that are going to throw up these charts with all these lines on it, whatever, and tell you the recession is going to happen this year. It's actually for a very simple reason, which is probably not the most intelligent reason, but somehow it still works, which is the Sam Bennett chart, I believe is the name. And 2026 is on that chart for the year that you should sell assets, quote unquote. I don't really know if there is ever a time you should sell your assets, but that's just my personal opinion. It's not financial advice, but I do think next year is the year you should start worrying about a recession. But everybody thinks it's going to happen this year, not just because the market is down so much, but because of all of the layoffs that are happening. And of course, a lot of people depend on the government, whatever. I'm not going to get super political, but let's dive into the comments. So Cars by JMO says, I'm down 1.4 mil and I don't care. That is impressive. If that is true, that probably means you have a lot of money, hopefully. I'm hoping that's not 1.4 mil in leverage that you're down. But either way, I did like your comment. Those are rookie numbers. Yeah, I know. I always want more and more, especially of the stocks that I already hold. Even looking at my Robinhood position, I'm like, man, I could have so much more shares. Instead of 1,500, I should have 3,000, whatever. But yes, that was a good comment. I did like that. And switch to futures. That is a very interesting comment you should mention, because I've been contemplating next week whether or not to place my very first futures trade. Now, I am already a bit leveraged, and I don't know if I'm comfortable pulling even more, but I do really want to get into futures, and instead of just constantly thinking about it, I just want to get it over with, place my very first futures trade, and then make a future video on it, no pun intended. Even though I am already leveraged, and I don't know if right now is the best or worst time to place a futures trade, whatever, but I do want to place my very first futures trade in the future. And I want to stop just saying it or just thinking about it and actually make it a reality. And I also want to post a video on it, of course. So, yeah, it is interesting that you should mention that. Tricone Terror. I'm sorry I mispronounced your name. But yes, I am considering placing my first futures trade. Cool Halo 3 Clip says, I should have just bought the VIX and made back my losses. Sucks, man. When it comes to the VIX, yes, you could have made a lot of money buying the VIX, especially a leveraged ETF on the VIX. But when it comes to trading that, you need some incredible timing. So even though it's easy to look back and say, oh, I coulda, woulda, shoulda, just sold all my stocks and bought the VIX, whatever, doing it is so much harder. And I don't know if it's worth it in the end, because if you buy the VIX and it ends up going down, you're basically holding a worthless asset. I mean, you're basically bag holding, at least if you're holding a stock that is growing, is buying back shares, is growing their earnings. At least you feel like you're holding something productive, right? Especially if they actually pay dividends. So it is still bag holding, but it doesn't suck as much. Mike T says, stop crying, I lost 227,000. That is a good play on my title, which is why I liked it. And yes, I am grateful that I still have six figures in my account, which leads into the next comment. Prince of Opinion says, you want me to stop crying? You still have six figures. So yes, I am grateful. I still have six figures. And even though I am down basically 60 grand from the top, I think I'm doing okay. I could have hedged a bit better, but I think I'm doing all right. Especially looking year to date, I am still outperforming the NASDAQ. So yes, I'm doing something right. Matt in the Money says, remember, money is just a worldly thing. You don't take it with you in the end. Don't let your emotions get in the way or your trades will get even worse. I'm transitioning into buying some long-term leaps. Panic trading gets you nowhere. Very good comment, which is why I liked it. And that kind of leads me into like a deeper philosophical finance talk that just deserves a separate video just by itself when it comes to taking risks, not just in finance, but in life, taking on debt and leverage. Just that whole entire topic deserves a video on itself, and remind me to post a video about that topic in the future. Dillant says, dude, Palantir is possibly the worst stock you're holding. CEO literally is nose for pumps and dumps and LMMs. I think what you're saying is Palantir sucks and the CEO is known for pump and dumps or something like that. And yes, I will agree with you that it sucks that the CEO says stock's gonna go up, whatever, or he like really hypes up the retail community and then not really behind our backs because it's all public information, but he ends up selling a bunch of stock. It is a sucky feeling, but it is what it is, man. I mean, dude is a billionaire. The way he makes most of his money is through selling stocks, so it is what it is. And of course, Noon says you should do some research. But then Dylan also says, why don't you just sell and be liquid for a bit until all of the uncertainty slows down? It's possibly the smartest thing you can do. So this leads me into the topic, another topic I want to talk about, which is the bearish sentiment in the market right now. I've noticed one of the great things about being, I guess, a finance YouTuber, if that's even what you want to call me. I basically have like zero influence on the market, but I guess I am an influencer. That's such an icky word to say out loud. It's so cringy too. But one of the great things about this is looking at my views and my stats and my subscriber count, I can somewhat gauge the sentiment in the market. Whenever things are super bullish, super bearish, I'll get a random spike in views. So usually my videos will get around 200, 300, 400, 500, 600 views. But then there'll be these random moments where I get 1,000 plus views, right? 1,500, 2,000 views. And it's basically a bunch of tourists. Even though I am grateful for getting more views, it's not really what I want, because what I actually want is people that stick around, actually watch my videos, actually stick around in the market. And one of the ways that I can tell I'm getting a lot of tourists is on those consistently viewed videos where I'm getting like 500, I'll notice my watch time is much higher. So it's like 4 to 5 minutes. But then the video, like on this one, where I get 1,500 views or whatnot, the watch time will only be around a minute, 2 minutes, right? So it's a lot of people that are mad at the market. They see my video, they click it, watch it for a minute, they comment something like this, and then they just click off of it. So even though I'm happy that I'm getting more views, I'm not happy about the quality of the views, if that makes any sense. I would much rather have people that actually want to stick around, not just selfishly because I get more watch time, but also because it's a sign that you guys are actually interested in the market. Now, when it comes to your comment specifically, why don't I just sell and be liquid? Well, number one, there's not a reason for me to sell because I'm not getting a margin call. There's I mean, even if I were to go all cash right now, I would most likely just rebuy the stocks that I already have. And when it comes to the uncertainty part, I don't know the exact stats on this, but usually the best days in the market come right after the worst days. And usually the best times to buy stocks or buy the indices are times of uncertainty. So that is usually the smartest thing you can do. If you go back in history and ask the people that sold at the bottoms, they would probably say something like, yeah, I thought that was the smartest thing I could do at the time, but looking back, I heavily regret it. That is probably what they'll say. Now, I don't know because I wasn't alive in most of those times, but I'm just guessing here. R1TZ97 says, man, I've been buying so much SoFi shares and leap spreads, which kind of reminds me, there has been this resurgence of the SoFi retail community versus the Robinhood retail community. And it's not really a rivalry because, not that I'm aware of, I don't think SoFi the company has any beef with Robinhood the company. But it's just this thing that I've noticed after Robinhood left a bad taste in a lot of people's mouths, that kind of led into this hype for SoFi. And I'm not saying SoFi is a bad stock. I actually own some SoFi personally, but I just don't get why there's so many people that see the value in SoFi but don't see it in Robinhood. I just don't understand that, because to me, there's so much more excitement in Robinhood. There's so much more possibilities, I guess, and they're moving at such a fast pace that I think a lot of SoFi investors are just blind to it. They're blind to SoFi not moving as fast as Robinhood, which I hope changes under this new administration and this new regulatory environment, but we'll see. But it is something that I noticed during this recent downturn, where a lot of the people that are saying SoFi is better than Robinhood, whatever, a lot of those people are starting to come back, even though it did die off a little bit when Robinhood had that huge upswing and SoFi was still kind of hovering. I mean, it went up from like $7 a share to $12, so that is a decent gain, but not nearly to the extent of Robinhood. I mean, Robinhood was up there with like Palantir and Nvidia for best performing stocks. So some of that SoFi is better sentiment did go away, but with this recent downtrend, with Robinhood hitting $35 a share, a lot of that sentiment and that talk is starting to come back. But in my opinion, you know, I'm happy with where I'm at with my portfolio. Robinhood being number one is, I think, where it should be. Evil Jerome Powell says, if everyone you know in Robinhood is giving up on trading, isn't it time to short Robinhood? Well, Evil Jerome Powell, I will answer your question with another question. Do you think it is smart to short something that is already down almost 50%? A stock that is trading at relatively cheap levels compared to where it's been trading throughout history, and a company that is not only growing very rapidly, but is constantly innovating and opening in new countries. Do you think it is a good time to short that company when it is already down over 40%? You tell me. And you also say whatever you're doing is not trading, bro. It's called bag holding. Okay, I mean, buying Robinhood at $9 to $10 per share and riding it all the way up to 65. I mean, not really bag holding much. And I'm still outperforming the NASDAQ, even though I'm down 60 grand. So you tell me, am I bag holding? Maybe to the person that bought Robinhood at $60 a share, right? Like that person, I guess, is bag holding, but I don't feel like I'm bag holding at all. Daniel Balicki, I'm sorry if I mispronounced your name, but he says Tesla had one of its biggest red days in history today, which once again speaks to the market sentiment. Those who have been buying puts have been making so much money, or bank lately. I don't know why I keep misreading, but yeah, I mean, if you were buying puts during the whole Trump hype, market was going up. Robinhood was like 65 a share. Palantir was like 120, of course. If you were buying puts during those times, yeah, you did make a lot of money, but once again, that's history, right? That's already the past. Most likely, the people that were buying puts at the top are cashing in their profits right now, and maybe they're buying calls right now. I don't know. I don't know these people, but all I know is those puts that were cheap before are definitely not cheap now. So I don't know if I should be buying puts. Chicken Joe says, people be hyping this up saying it's the start of a recession. Those sellers can go ahead and lose their money. Which once again reminds me of that Bloomberg survey of a lot of people saying the recession is going to start this year. That in itself is another reason why I don't think the recession is going to be in this year. Because everybody's already expecting it. You look throughout history, selling stocks during a downtrend, usually not the smartest idea. So I did like your comment, Chicken Joe, which is why I liked it. But yeah, I have also noticed that there's a lot of people hyping this up, saying it's the start of a recession. And most likely the recession will come soon, but I just don't think it'll be this year. What goes down must come up, or something like that I heard. And yeah, it's something I already said. If you look throughout history of the American stock market, whenever it came down briefly, it came right back up. Brody Hawk asked me, how do you think this week is going to go, Dan? Honestly, I don't know. I could be like all these TikTok gurus, flashing all these fancy charts on your face, showing you how smart I am or whatever, making all these predictions, but I honestly don't know. All I know is it's probably not a good time to sell stocks when everybody and their mom already has. And a quick update on my Roth IRA. I was up, I want to say like 10%, a little slightly over 10% in my Roth IRA. But then I gave up all those gains immediately. And if you take a look at my all-time, I'm basically flat. If you take a look at some of my positions, TNA specifically is down 21% in my account. But I did see on X, I'll try to throw up the post, there was a politician that started a position in TNA, which is a leveraged position on small caps. So I did think that was pretty interesting. And it was good news for me. Because, I only have 3 shares in my Roth IRA, but it's good news for my IRA, I guess. And just to quickly go over some of the moves I've been making recently, I did have a cash secured put on NCLH, which is Norwegian Cruise Lines. I've been wanting to own a cruise line for so long, but I've never pulled the trigger because the best time to buy the cruise line was obviously during the pandemic. And unfortunately, that ship has sailed, no pun intended. I do see a very good setup on Norwegian Cruise Line in the higher time frames. It's just, I'm not really sure how I want to play it yet, but I did want to take advantage of that small dip. So I did sell a cash secured put, which I then later closed it out because I needed to free up some cash for an upcoming margin interest payment. So I just decided to take my small profit. I did go ahead and also switch my monthly Robinhood Gold into an annual to save $10 a year. And I was happy to see that Robinhood actually credited me back those unused Robinhood Gold days. So that was nice of them to do. And anybody that has seen my X post, I did go ahead and buy some ROBN in a separate brokerage account. And I did go ahead and sell that cash secured put here because it was only $800 of collateral for $200 of premium, which is just stupid fat. But yeah, I wanted to go ahead and buy this, not only because Robinhood was down so much, but also because I want to sell covered calls against my Robinhood position, but I don't want to give up my Robinhood equity. So this ETF will allow me to place those option trades that I've been wanting to place without risking my actual position.